Hello fellow investors and welcome to Sylle Invest, where we bring knowledge to investing. Is Sortix greatly undervalued compared to its peers? Today I will give you a brief overview of the company and how the numbers look when compared to similar companies. Remember, I am not a financial advisor and you should do your own research before investing. So, who are Sortix? Sortix is a biopharmaceutical company that focuses on kidney disease. They have two products preparing for phase 3 clinical trials. They have broad patents. They have a very experienced management. I believe they are greatly undervalued compared to its peers. And they have an aggressive uplisting plan for the Nasdaq or NYSE. The products of a biopharmaceutical company can often be hard to understand and they can sound like wild magic. Luckily, Sortix's approach is simple and I have broken it down to a single sentence. The idea is to target cytidine oxidase to inhibit production of uric acid. That is really a mouthful. Many of the things I say today would be a mouthful. I can barely even say the word, so be prepared. But the thing here that is important though is inhibit production of uric acid, which means like lowering the levels of uric acid in the body. And here is why that is their approach. Several studies show a strong association between elevated serum uric acid and high blood pressure, insulin resistance, diabetes, kidney disease with loss of kidney functions. Diabetic patients' kidneys, they tend to be extra sensitive to uric acid, even in the normal range. So uric acid is usually in the body, but diabetic patients' kidneys can even be sensitive to normal ranges of uric acid. And if you lower the uric acid, you have this ability to slow or reverse the decline in the filtering capacity of the kidneys. Here's an amazingly blurry image of their pipeline. Two products are getting prepared for phase 3 clinical trials, and one is advancing towards the clinical development stage. From the top, we have XRX 008, which is a treatment for, autosomal dominant polycystic kidney disease, also a mouthful. And the XRX 101 is for acute kidney injury due to COVID-19 infection. The XRX 225 is a type 2 diabetic. It's for type 2 diabetic nephropathy. I don't know if I said that right, but I hope so. Which is basically a kidney disease as a result of diabetes. All of these products have the approach of reducing levels of uric acid. This prevents patients from degrading to the point where they need dialysis. Because once you are at the level where you need dialysis, the risk of dying in the coming years is very high. And they want to prevent this. I'm going to touch here on the patents. I told you they were broad, and I will show you exactly how broad they are. So here, let's read together. Sortix is the exclusive licensee of 3 individual US granted patents with claims to the use of all uric acid lowering agents to treat high blood pressure, insulin resistance, or diabetic nephropathy counterparts. For some of these patents, applications have also been submitted in Europe. They basically have a patent that claims the use of all uric acid lowering agents, all, to treat high blood pressure, insulin resistance, or diabetic nephropathy. So if any company in the world wants to tackle these problems by lowering uric acid, they have to license to Sortix. If uric acid becomes one of the things that the medical world focuses on, if research becomes big enough here and they realize that, research already show that it is bad. But if it shows that, if more studies come out and shows that it is really bad and this will be the solution for many of these problems, then all of these companies who try the uric acid approach, they need to license from Sortix. And that is huge. I don't even understand how they got this patent. It is too broad to be a patent, but hey, they have it. I will not complain. So even if all of their products were to fail, they could simply run with this patent as long as any company in the world wants to use anything that lowers uric acid for those problems. Huge. Moving on, I'm going to touch briefly on the management team. So the management team has an average of 15 plus years of experience in the pharmaceutical industry. This is their field. This is what they do. And they have been in companies of different magnitudes. So they know how to run businesses like Sortix. I think even Sortix is like small for their experience. I think they've all been in like huge companies. So they're really pushing this upwards. Looking at board of directors, they're highly qualified researchers. They're experts in the fields of drug development, corporate development, and pharmaceutical commercialization. And so they really have the explicit knowledge for this. This is exactly what they do, and they're well suited for this company, for Sortix, to drive this company forward. It's not often you see such an experienced management, and they're also supported by a highly regarded network of leading experts. So they do have the expertise to get this through. Moving on, it's actually the main part of this video. It's going to be comparing Sortix to its peers. So let's look here from the top. Let's bring the mouse here. Here's a comparable pre-revenue companies in similar diseases/orphan drugs. So here we have a lot of companies which are basically their peers that do similar things. Here are their symbols. Here are their market caps. Here are their firm value, which is like market cap minus cash plus debt. And here we have like pipelines, because biopharmaceutical companies, they have pipelines. Like this product is in phase 1, phase 1.5, phase 2, late phase 2, and here's like phase 3, NDA, and then market. So depending on the approach, by the way, this is a report that was released by eResearch Corp 1 year ago. It's a great report. You all should read it. It will be in the description down below. So depending on how many products you have in the pipeline and where they are, you get a pipeline value points. And they use these to calculate how much the company should be worth. So here we have a company with one product in phase 2, which gives them 10 points. So phase 2 is like 10 points, late phase 2 is like 12 points, and it moves up here. So here is more value and here is less value. And then they take the firm value divided by the pipeline points, and they get a median value. And this median value basically means that for every pipeline value point, the company should have a firm value of $13.7 million. So this was done exactly 1 year ago, and we can see here that the market cap for Sortix back then was 9 and the firm value was 8. But here we could see they had 20 points in the pipeline value, so they should have had a firm value of $273.2 million, and they had 120 million shares outstanding, and that would actually give them a price target of $2.28. And today is exactly 1 year after, and we are currently sitting at 36 cents, 36.4 cents to be more precise. So it's very cheap. It's definitely, if you compare to the peers, very, very undervalued. Let's look at another example here. Let's take this company like 89 Bio, a market cap of 427 million. They have one product here in phase 2. They have 10 points. We have 20 points today. By the way, these two, I think they are ready for phase 3 trials. They're getting there, so they are moved here to 2B. So we basically have 24 points right now. This company had 10 points, and they were worth 427 million today. The market cap for Sortix is 40 million, and they have 24, not 10. It's like less than a tenth of this, and they have more than twice the pipeline value. And the other company here, also 10 points. So they have one product in phase 2. $1.2 billion, and we are worth $40 million with more than twice the pipeline value. This is insane. But I've done some math for you so to see where we are today. This was 1 year ago. So where are we now? So we have so this 20 is now 24. We have actually progressed as one should do, and this is very good. And since we have 24 pipeline value points, we should have a firm value of $329 million. We do not have that. Let's just say that. Number of million shares. Right now we have 142 million shares fully diluted. If Sortix reach Nasdaq and NICE, there would be an initial offering to raise cash to be able to, I would say it's to fund some of the phase 3 trials because they are very expensive. So if they get to Nasdaq NICE, then they will have a total of 191 million shares, roughly speaking. Okay, so if we have 24 points, 191 million shares fully diluted, that would give us a share value of, let's see, let's write this, boom. Wait, there we go, bam. $1.72. Since we're at 36.4 cents, this gives us an upside, a comparable upside by 373% compared to its peers. So if this company was to be valued equal to its peers, it would be worth this, not this. Which means this has a huge upside potential, and this gets me really, really hyped actually. And one thing that's also not to forget, here's a statement from eResearch Corp that did this price target research and also did this document. Here's what they said: our target price is extremely conservative, even when compared to a long list of biotech companies at a similar stage of development in kidney, liver, or orphan diseases. They even say that these numbers are extremely conservative. I'm one of the reasons I believe that is the case is because none of these companies trade on the CSE, and most of them now, I'd say, trades on Nasdaq or NICE, and institutions, most of them don't touch the CSE, and many of them don't touch the OTC. So that would definitely be one of the reasons why there is such a big gap, and that is also one of the reasons why they are uplisting now to Nasdaq, NICE, and TSXV. TSXV is basically granted. The Nasdaq and NICE is something they're really trying to do right now. So let's go from the top here and see what's going on. So the TSXV, they have already met all the requirements, and the uplisting can happen any day. They're basically just waiting for the TSXV to reach out to them and say, okay, we have approved of your request. And this can happen like any day, any week. I expect it very shortly, and that's very exciting. Moving on, we have the Nasdaq and NICE. They have some requirements that are not met right now. For example, the Nasdaq has a requirement of a market cap of $45 million US, and the NICE has a requirement of 40 million. Currently, they are sitting at 40 million market cap. That's after a week of 100% increase. So they had like 20 million 1 week ago. So they've almost reached the Nasdaq. I think the Nasdaq is their main target. And if they manage to land between 45 and 40 million, they will go with the NICE because they do meet that criteria. They also have another requirement there, $4 in stock price, and they will basically do a reverse split before the uplist to resolve this. So this is a non-issue. All other requirements except for these are met. And the uplisting to the Nasdaq or NICE should happen around the end of September. So what does this mean? What do these things mean for the company? Here are my key takeaways. So firstly, the uplisting to both TSXV and the Nasdaq/NICE it will open up for a whole new set of investors. As many investors and institutions, like I mentioned, they don't touch the CSE and the OTC where they are right now. So this will be huge for them, especially for closing the gap towards its peers, which is a huge gap there. Also, let's remember that Sortix is under a quiet period, because when you try to uplist to NASDAQ or NICE, you have this quiet period when you can't promote yourself, which means that Sortix, they expect the company to be worth at least $45 million by the end of September. That because it is really bold. I mean, they would not be so bold to try to uplist to the NASDAQ if they did not have a plan to reach at least $45 million in market cap. Otherwise, they would just shoot themselves in the foot. So I believe they really have a solid plan for this. Even though they are in the quiet period, there can still be news from outside sources that can help them push to these levels. And after we reach the NASDAQ NICE, I would say the stock would, I think it's going to go wild. I think it's going to go wild. Also, because if you look at number 3 there, since it's a quiet period, they are building up news because they cannot really release them until the uplisting. So 4 months of news will be released once or if they uplist to the NASDAQ or NICE. It's if, because if they do not reach 40 million market cap by the end of September, now they already have, but if they would take a dive, then they do not meet the criteria. But as I mentioned, I do believe they have a plan for this. It would be silly to try to uplist and then not have a plan to succeed. So once they do uplist, it's going to be a barrage of news. Like everything for these 4 months is going to, and I think it's also a good plan because they want to attract the American investors. And once they get to the NASDAQ, when the eyes are on them, they're just going to roll it out for everyone and show them what they do. I think this is going to be huge once they get there. And this takes us to the end. One video can't cover every aspect of a company, so I invite you to join Penny Queen's Discord for investors, where we have a channel dedicated for just this company also. There are many intelligent investors in the Discord, and it's a great source of knowledge for many companies and also stocks in general. I hope to see you there so we can discuss this and other companies together. If you found this video helpful, please like and share, and don't forget to subscribe. If you want to support my work, please consider becoming a Patreon or donating. These videos take a long time to prepare, and your support is really appreciated. Thank you for watching, and have a good one.